Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Tuesday, April 28th, 2026, and we're ready to unpack all the market buzz from Lister Day, April 27th.
That's right. Our AI-driven analysis picked up a significant number of discussions yesterday, flagging quite a few different stocks. The overall sentiment, I'd say, was a bit of a mixed bag, Ethan. Some very promising growth stories, but also a few areas that definitely warranted a lot of caution.
Absolutely, Brooke. Let's just say there were some strong opinions flying around, and our system was busy. We've got a lot to cover, so let's dive right into today's hot leads.
All right, first up, let's talk about Microsoft MSFT. Our system picked up some intense discussions around its upcoming Q3 earnings. Previously, we've had a few stay away or cautious buy ratings, but mostly buy recently. The current AI-generated insights indicate a cautiously bullish sentiment, moving us towards a buy recommendation.
You know, Brooke, MSFT is a powerhouse. The sentiment suggests an expectation that Wall Street might finally recognize and reward Microsoft's robust cloud growth, particularly Azure. We're talking about incredibly healthy net profit margins at 39%, revenue growth around 16.7%, and an excellent return on equity. Jim Cramer even expressed optimism for spectacular data center numbers. With those kinds of fundamentals, any short-term dip could really be an opportunity.
I hear you, Ethan, and the underlying business fundamentals are strong, no doubt. But the anxiety around the upcoming earnings is palpable among users. That 26.6 PE ratio, while not unheard of for a tech giant, means a lot of future growth is already priced in. If those Q3 results don't exceed sky-high expectations, we could see some volatility. Also, we did note a slight net insider selling trend, which always gives me pause. So while the long-term potential is there, the short-term feels a bit like walking on eggshells. Fair point on the short-term.
For Microsoft, considering everything, I'd lean towards a cautious buy.
I'm aligned with a cautious buy on that as well.
Next up, let's turn our attention to Reddit, RDDT. The discussions we analyzed showed a lot of initial enthusiasm, pointing to strong revenue growth and improving margins, plus the unique value of its conversational data for AI training. This stock has been a mix of stay away, speculative gamble, and cautious buy in the past, with the last rating being stay away on April 24th.
Ethan, while the 70% year-over-year revenue growth sounds impressive, that PE ratio is sitting at over 60. That's a huge premium. And users are already raising concerns about the potential for AI-generated content to degrade the very data that makes Reddit valuable for training other AIs. Not to mention, it has a beta of 2.4, making it incredibly volatile. Past post-earnings performance has also been shaky. The AI insights for this stock land us firmly in stay-away territory.
Well, you do make a strong case there for caution. The high valuation and data quality concerns are definitely something to watch. For Reddit, it's a stay away for now.
Agreed. It's a stay away.
Moving on to Netflix and FLX. The sentiment is quite bullish here, Brooke. Analysts are projecting a significant price increase by Q4 2026, driven by a huge $25 billion share repurchase program. Insiders have been net purchasers of shares, and the company boasts an exceptional return on equity of nearly 48.5%. This looks like a solid growth story, building on its buy rating from April 21st. The share repurchase program is definitely a powerful lever for boosting EPS, and the insider buying is a strong signal of confidence. My main watch-out is the trend of steadily increasing expenses relative to what could be flattening revenue growth in later quarters of 2026. They're talking about profit discipline, which is good, but execution will be key to sustaining that impressive net profit margin. Still, with the projected price targets and insider confidence, the AI insights point to a buy. So for Netflix, we're classifying this as a buy.
Yes, a buy.
All right, let's talk about Avis Budget Group, CAR. User sentiment is overwhelmingly bearish, frankly. The stock has seen a massive price collapse from a 52-week high of $847 down to its current $187. Our last two ratings for CAR have been stay away.
And for good reason, Ethan. The KPIs are screaming red flags. A negative price-to-book ratio, negative earnings per share, and negative net profit margins. The company is actively losing money. While there's a fascinating anomaly of massive insider buying, over 870% net shares purchased, those fundamentals are fundamentally broken. That level of insider activity, while intriguing, doesn't negate the severe financial distress and dramatic price decline. Our analysis maintains a stay away.
You know, Brooke, that insider buying is definitely a head-scratcher. It makes you wonder what they know. But you're right, the numbers just don't support an optimistic view right now. For CAR, it's a definite stay away.
Absolutely. Stay away.
Next up is Compass Pathways, CMPS. This one is really exciting. It's being called an underrated psychedelic play with major catalysts ahead. They're significantly closer to FDA approval for their treatment-resistant depression therapy, having received a rolling review and national priority review voucher. Plus, insiders have been buying, and B. Riley initiated coverage with a buy rating and a $17 price target. We rated it a buy on April 21st.
Ethan, the FDA designation is a game changer for a biotech company in the development stage, de-risking a significant portion of their path to market, and the insider buying is a strong endorsement. We must remember, however, that it's still pre-revenue with negative EPS, and the stock is trading near its 52-week high, meaning a lot of that optimism is already baked in. The beta of 2.018 indicates high volatility. So while I agree the catalysts are compelling, investors need to be fully aware of the inherent risks of a speculative biotech.
True, but the potential is enormous if they hit. So for CMPS, it's a buy.
I'm on board with that. Buy.
Now, for what seems to be the main event today, POET Technologies, POT. Brooke, this is a tough one. Our analysis picked up multiple posts, and the sentiment is overwhelmingly bearish. The stock has plummeted. Reports say 30% to over 50% after Marvell canceled all Celestial AI purchase orders over an alleged confidentiality breach. There are accusations of Ponzi scheme and incompetent management. This has consistently been a stay away or speculative gamble in our previous ratings.
Ethan, this is a catastrophe, plain and simple. Every KPI is a red flag. Negative EPS, zero net profit margin, a deeply negative operating margin of negative 41.74%, and a high debt-to-equity ratio. The company is fundamentally unprofitable and has just lost its major customer due to a self-inflicted wound. The news will only exacerbate these already terrible financial metrics. User comments are rife with frustration and predictions of further decline. There's virtually no insider buying to suggest confidence. The AI insights unequivocally say stay away.
It's hard to argue with that, Brooke. The damage is profound. For POET, it's a resounding stay away.
Absolutely. Stay away.
Next up, Marvell Technology, MRVL. Now, Marvell was the company that canceled those POET orders, showing their commitment to corporate governance. Our analysis shows a neutral sentiment from users regarding MRVL itself, but the overall data points to a mixed picture, with a stay-away suggestion for immediate action, but a potential for a future buy. Our last rating was stay away on April 24th.
While Marvell's action highlights their corporate integrity, let's look at their own metrics. A PE of 51.53 and a PEG ratio of 1.93 suggest the stock is quite richly valued, with much of the growth already priced in. While revenue growth is strong at 22.1% and profit margins are healthy, the stock has been reported as falling recently, despite general market rises. I'd exercise caution here.
I get the valuation concerns, Brooke, but we can't ignore the incredibly strong insider buying here. Over 48% net shares purchased in the last 6 months. That's a huge vote of confidence. Plus, they just acquired Polariton Technologies, which could be a strategic boost. Given that insider sentiment and strategic growth, I see a clear path for them to justify that valuation down the line. I'd lean towards a cautious buy.
The insider buying is a powerful contrarian signal, and the acquisition does offer potential. However, the high valuation still makes me wary of the immediate entry point. I'll agree to a cautious buy, recognizing the long-term potential but highlighting the current premium.
Moving on to NVIDIA, the AI darling. This one is pure bullish celebration from users, Brooke. Exceptional long-term performance, stellar growth, and it just hit a new all-time high, pushing its market cap above $5 trillion. We had it as a stay away on April 25th, but the current data strongly suggests buy.
Ethan, the numbers are indeed phenomenal. 73% revenue growth, a 101% return on equity, and a net profit margin of 55.6%. What's particularly striking for such a high-growth stock is the PEG ratio of 0.74, which suggests it might still be undervalued relative to its growth. And yes, substantial insider buying further reinforces confidence. However, we must acknowledge the incredibly high PE of 44, its massive market cap, and JP Morgan's recent warning that its explosive run might see limits. The stock is also highly volatile with a beta of 2.335. Well, Brooke, while those are valid points for caution, the AI partnerships and continued innovation really show it's not done growing. The fundamentals are just too strong to ignore. For NVIDIA, it's a buy. It is a buy, but investors need to be fully prepared for its inherent volatility and elevated valuation. Lastly, let's talk about AST SpaceMobile, ASTS. This is a very interesting one, Brooke. The vision of universal cellular connectivity from space is truly groundbreaking, and users are incredibly bullish, projecting price targets of $100 or even $200. Yes, there was that recent Blue Origin launch error, but they're moving to more reliable partners like SpaceX for future deployments. This is a speculative growth play with massive potential. This has often been a speculative gamble or stay away, with the last being stay away on April 20th.
Ethan, while the long-term vision is compelling, the company is still pre-profitability with negative EPS and zero net profit margin. That's a fundamental risk for a company with a high debt-to-equity ratio. But what truly gives me pause here is the significant net insider selling, over 4.2 million shares sold in the last 6 months. That directly contradicts the retail investor enthusiasm. Until we see that insider activity reverse and a clearer path to sustainable profitability, the AI insights are leaning towards a stay-away recommendation.
That insider selling is definitely a concern when the community is so bullish, but the potential, Still, given the metrics, for ASTS, it's a stay away.
Yes, stay away.
All right, that was quite the deep dive into the market chatter. Let's quickly recap our top candidates for deeper analysis today. Investigate as buy, Netflix, NFL, Compass Pathways PLC, CMPS, NVIDIA Corporation, NVDA. Investigate as cautious buy, Microsoft Corporation, MSFT, Marvell Technology Inc., MRVL. Investigate a speculative gamble, AST SpaceMobile, ASTS.
And that wraps up another episode of the Daily Hunt for Multibaggers. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place and knowledge is your best asset. Thanks for tuning in. We'll be back tomorrow with more AI-generated insights to help you in your daily hunt for multibaggers. Happy hunting, everyone.